Here from FX Jake, and we've got Colin. Some of you know him as Rob from the Daily Trader. Rob's from the Forex Room, and as promised, I'm sorry about the difficulties we had there getting it started, but we're all ready to go now, and Rob is going to show us something really cool, which is his new trend following system, and I'm really excited to see this. So Rob, take it away. Let's see what you have for us today, and thanks again for your time, Rob.
Well, thanks for having me. Hi, everybody. Hope you're having a good day. I'm here today to talk to you, as Walter said, about a new system that I've been using that we're calling Surge. Surge is actually, well, we'll get into that a little bit afterwards. I just want to show you a couple of things here first. So as Walter said, I'm from theforexroom.com. It's a live trading room where we trade London and New York sessions. I have many roles. I'm a moderator at the Forex Room. I provide trades and email signals similar to what Walter does, and we work together quite extensively on that. The Daily Trader, a lot of you know me from there, and the Naked Forex Now forum, although I haven't had a lot of time as of late to moderate much on the Naked Forex Now forum. And then also I'm an asset manager. I have managed accounts, and I work with a company out of London as well. So that's a little bit of background about me for those of you that don't know me. As far as the live room goes, just a little bit more, a little blurb about that. We do between about 100 and 300 pips per week. We've been running now for 12 weeks, and in the last 11 weeks we've only had one losing week, which is a week we finished at minus 62 pips. And we do publish all of our results weekly. Now, the whole point of all of this is your success and our success. And a little blurb that I'd like to say about that is that you already have everything you need to be a successful trader. Every decision and action you have taken has brought you here to realize your dreams. And I just think that's an excellent statement. I believe that we all have everything within us to become a successful trader, and really all we need is the right tool. And with that, that's one of the reasons I've developed Surge, is that Surge for me has become the right tool. So what is Surge? Surge was developed first and foremost with a strong understanding of price action. A lot of you that know me from the Daily Trader or from other ventures with Walter know that I'm very much a price action based trader. I have my favorite setups are, I guess I'm kind of famous for my Big Shadow and my pin bar setups. Sorry, Walter, was there a question?
No.
Oh, okay, sorry. Okay, so yeah, but sometimes I find, I don't know about anyone else, but I find that, especially on the lower time frames, I find that price action just isn't enough sometimes for me to really feel like I want to place my capital on the line. And so the point is basically that if I were to see a 1 hour pin bar on a support zone, well, is the support zone strong enough? Is it going to hold? What other factors are we going to have to deal with? And so I just look for, I went looking for something that would give me a little bit of an edge in those situations. And so a few questions about price action. Can you confidently, for example, pick out a Head and Shoulders and trade it properly? Me, I'm terrible at Head and Shoulders, so if you're ever looking to me for Head and Shoulders, don't. How about an inverted crab or a golden butterfly? Do you know every type of doji and railroad tracks? Do you know how to trade them? Or even do you know what they are? So we can't always do those things all the time. They don't always work in all markets. And while they do work, a very high percentage of the time, sometimes you just don't get those setups and price takes off without you. So that was one of the reasons I developed Surge. I wanted to simplify it, concise rules, and to be objective. So Surge's elements, we use support and resistance, of course, which has always been a key part of my trading. We use offset moving averages. We have what's called our own indicator called the TFR AO, and of course we use it all objectively. Support and resistance, we use an auto pivot indicator that plots daily, weekly, and monthly support and resistance, which a lot of you would have seen in my posts in the Daily Trader. And we also use our own indicator that plots interim support and resistance, which gives us our entry and stop levels automatically. And we call this just TFRL for level. Now this is a screenshot of our support and resistance. You can see that we've got weekly S here. We've also got down here, I still draw in some manually, so we've got a strong support down here. And then these red dots and blue dots are our entry and exit levels. So if we were to take a long trade off of this candle right here, for example, my stop would be at that red dotted level there. So, for example. And then the next is the moving averages. Moving averages are pretty simple. They're 5, 8, and 13 simple. We set them to the mid price with the high plus low divided by 2. And they're offset forward by a factor of 2, 5, and 13. And what this does is it projects the moving averages ahead of the actual price action. So you can the way you read it is you kind of look at it to give you direction before price actually moves in that direction. We also use a 62 EMA, as we call it, the balance line. We often refer to it as the spirit, which is basically helps us to determine which side of the market we want to be on. And combining all of the moving averages gives us a valuable tool to determine market momentum, flat, bearish, or bullish, as well as the strength of the trend. And here you go, we can see we have a slide here. We now have our support and resistance levels on here and our moving averages, which this one right here is the dotted line is the 62 moving average, and the other three are the simple 5, 8, and 13. The TFR AO indicator, and then we also have an alert arrow that gives us gives us our indication of when we should truly be looking for an entry. Just basically just helps us to say, you know, when you're monitoring multiple pairs, we're looking for when that arrow pops up and says we have a buy potential or a sell potential, it just brings our attention to the pair more than anything. But basically the two of them combined work as one. So here's the arrow. You can see that we've got blue arrows for buy and red arrows for sell. Very simple system. Down here we have the AO indicator, and basically when you get a blue arrow and the AO is above, that's a big criteria to go long, and when you get a red arrow and the AO is below the zero line, you get that's a pretty good criteria. That's the initial criteria to go short, for example. So you put it all together, and what you get is a simple, effective trading method with clear entry and exit rules. No muss, no fuss, straightforward. And this is what it looks like complete. We have moving averages, support and resistance, a buy or a sell arrow, and a simple indicator at the bottom, and that's all it is. That's all it takes. So the first setup, very straightforward. It's called the sleeping market. What we mean by that is what we need for that setup is we need market sleeping, basically flat. Buy and sell arrows are printed in the same range. The TFR AO plus is close to the zero line, and price is close to the red line. This right here is, right here we have market sleeping. All the moving averages are intertwined. We have them coming together with the 62, which is even better in this instance. We've got a down arrow, we've got an up arrow. You know, market has just been banging around back and forth in here. We've got the AO down here. You can see that it's close to the zero line. It's a little bit below, it's a little bit above. It's just not really going anywhere. So what we're looking for at this point here, this is early in the London session. Right here, the dotted lines are the beginning of each session. And this is a really good time to trade this method, especially on the Euro USD. You know, usually at the start of the, for coming out of the Asian session into the London session, or even the New York session, you'll have usually a period of market, what we call sleeping. And in this instance, you would put a buy order, you basically bracket the market by putting a buy order up here at these blue dots, and you put a sell order down here at these, and whichever one triggers is the one you would take. Now in this instance, you can see that our buy would have been triggered, but then we would have been stopped out on that one. But then our sell would have triggered and more than made up for the buy in this instance here. Oops, sorry about that. Moving on to the next one, setup number 2. Actually, are there any questions on that before I move on, guys?
Does it work in any time frame? Ask Greg W.
It works really well in all time frames, actually. What I'm finding is that the swing signals it provides me, it really capitalizes on the trend, no matter which direction it's going. And then as well, everything really from I personally haven't tested it on 5-minute or 1-minute candles, but I use it a lot on 15, 30, and 1-hour candles charts, and we do very well with it. I think it really shines on the 1-hour charts, but that's just simply because I'm available to trade those time frames. 4-hour and 4-hour daily and up charts, it works very well as well, and I'm actually basically taking trades off of this system, basically every valid signal off of every time frame kind of thing on a set of key pairs, and I've done very well at it.
Right. Tim O asks, how long have you forward tested it?
I've been forward testing now for 3 months. The first month we went live, because it was a new system, I risked only 0.5% per trade, and our return was 19.56%. December was only 2 weeks, and we finished at roughly 10%. And this month so far, I don't know the percentages yet, but in the beginning of 2013 in January, I'm up over about 1,300 pips right now for the month.
And you're risking 0.5 at the moment?
No, I'm now risking a full 1% on every position. I start with 1% and I add on as the position progresses, and I can get a little more into that with the next one. But yeah, I risk 1% now on every trade, and the average stop, I'm looking off a 1-hour chart. My preference is to have about a 30 to a 40 pip stop and a 2-to-1 target ratio minimum.
Right. And Ashley asks if it's so he says, so it's definitely not a one cancels the other setup. You leave both pending orders open. Is that right? When you were looking at the sleeping one, yeah.
Well, what would happen? See, in this situation, you would have left both. The buy would have triggered, but when it came back down here and crossed the red line, you take the buy off and you enter your sell.
Right.
And that's I would leave both orders on until a true direction had been established. If you got into the buy and it kept going, I would probably close it on the next positive candle in your direction.
Right. Hamza says, what's the reason of your decision to buy on the early London session?
I like the way London usually comes in with lots of volume. So coming out from Asia into London, we're typically coming out of a low volume trading session to a high volume trading session. And I find that the signals that are generated in the London session on the 1-hour time frames are the best signals between that or either in that first 1 to 2 hours of London session or the first hour of the crossover between London and New York.
Right, yeah. And Irvin wants to know, what is the average risk reward on the system?
Risk to reward on the system, I always go for a 2-to-1. a minimum is what I'm looking for.
Right. So the average would be higher, obviously. If the minimum is 2-to-1, your average must be 3.7 or something, right? I mean.
Yeah, well, I'll give you an example. Last week, just based on the calls from our live trading room, the largest stop we took was 20 pips, and we ended up with over 500 pips out of that.
Right. And how much of that was
So
this? How much of that was the surge system?
that was 440 pips of that was from Surge.
Surge, right? Yeah, that's great.
Yeah.
Last week was great for trend following. Yeah.
It was a really good week last week, and we just had a combination of the right setups at the right time. Really, it was really about, as with any market, it's really about timing.
Yeah, exactly. So Greg W says you open an order when the price action goes across the red line. Is that right?
We place stop orders, so we'll have a buy stop pending there.
Yeah.
And we'll have a sell stop pending on the other side. Yeah.
Yeah.
I put it 1 pip above the zone or below the zone to enter, plus the spread, of course.
Right. And when you say zone, you're talking about those dotted lines on this chart. Is that right?
Yeah. On this case here, we've got a buy at these dotted lines here, so we would put an entry 1 pip above that level.
Yeah.
And down here, the sell would go 1 pip below this level.
Yeah. Right. And those are obviously always moving based on it looks like they're moving based on the swings or something like that. The fractals are.
Yeah, it's basically interim support and resistance. It takes it's the high or the low of the last 5 candles, basically.
Yeah. Lots of questions here. A lot of people obviously saying, this looks like the Williams alligator. Is it similar to the Williams alligator? That sort of stuff.
It is. That's one of the good things about it, is that it does, the core of the system is based on Bill Williams' chaos theory and his alligator. Really what we've done, the only thing we've really done is I've had this arrow programmed to print when we get a cross of 2 moving averages, which you can't see on the chart. I just prefer to go with the arrow rather than have more moving averages kind of thing. It's really basically a very simple system, but it works extremely well.
Right. So the moving the moving averages that are on the chart, those are obviously pushed forward, like you mentioned before. The 3, 5, and what are they? 3, 5, and 13 or something.
Yeah. They're just shifted forward.
Yeah.
What shifting them forward does is it just projects them out in front of price.
Yeah.
So, for example, in this case right here, you can see that the moving averages started to curl to the upside, and then we got a buy signal kind of thing. That would, be a good indication that we could go long, right? So it just basically kind of helps you, foreshadow maybe where the market is going to go.
Yeah, exactly. It's great if the market takes off in a trend because by pushing it forward, it's sort of like saying, here we go, this is where we're going, Now, when you get whipsawed, of course, it's not so good, but, it's great because by pushing those forward, you say, look, this is where it's going. Yeah, exactly.
That's right.
Yeah.
Yeah, it's a way to try to get an indication of, where is the market going to go before it goes there. It's just meant to give you a little bit of an edge to get in on the move before at the beginning rather than the end sort of thing.
Yeah, David, you're absolutely right. David says this is the same as the Ichimoku. Ichimoku exactly does the same thing. It is push forward. Okay, so
right.
Rob, there are some questions. There's lots of questions here. Oh wow. There's so many here, guys. We got how long do you wait to set your orders? What about the whiplash? Greg wants to know.
Well, how long do we wait to set our orders? Basically, what I like to do is take the first valid signal after the London market opens. There is some good trading during the Asian session sometimes on the Pacific or the Asian pairs, but I prefer to trade to not place my orders until very close to or after the London Open.
Yeah, that makes sense. And
Yeah.
it's Mike S says, Rob, you mentioned you back tested it for 3 months, or forward tested it rather. How many
Yep.
trades were taken during that 3 month span, and what did you come out with as far as your win to loss ratio?
The number of trades that were taken, I actually don't have that information off the top of my head. The win to loss ratio, comes out at around 68 to 70%. Which might seem low, except that when you win much more than you lose, right?
Yeah.
So in this case, we're looking for a minimum of 2 to 1 when we enter a trade, but we never get stopped out for more than 1 to 1, and a lot of times it's usually about 1.5 to 1 because we use the red moving average as a balance line. So if we were in this long, for example, in this case, and it came back down here and pushed through this red line, we would take the trade off rather than wait for it to get all the way down here.
Yeah.
To stop you out. So you're going to take, instead of taking a full loss of your capital, let's say 1% on the entry, you're going to take your loss off at a 0.5%, re-enter in the true direction of the market when you get this arrow here and this zone here, and then obviously more than make up for the loss that you had.
Yep. Ecal Ansa says, what about those who only trade the New York close? Can you trade this? You mentioned that you do like trading it on the New York Open because you've got the overlap of the European session and the New York overlap. You like that, right?
Yep, we do. Yeah, I do for sure. The New York close is, if you can trade the last hour to 2 hours of the New York session, quite often that's a high volume session. You might want to trade, you might have to trade lower time frames with it, 15-minute or 30-minute charts. But I think you can do very well as long as the volume is there. The key really is the volume.
Right. Yep, that makes sense. What pairs do you trade? Asked Joe B. Or any pairs, or just those that are trending?
I trade any and every pair. I've been focusing more on the majors lately because for those of you that know me know that I used to trade exclusively daily charts. I never even ventured below the daily time frame. But now that I'm trading full time, and I can be in front of the charts, I typically trade the lower time frames, and because of that, I don't need to trade as many pairs. I get more than enough setups out of 6 to 8 pairs on a lower time frame that I don't need to trade 25, 30 pairs like I did when I was trading daily time frames exclusively.
Yeah. And Pablo says, at what time do those dots paint at the trade to the breakout? Well, those are just swing points, right? Like you mentioned.
Yeah, that's just interim support and resistance. So those will print after each 5th candle closes.
Yeah, exactly. So if you have a new low, and then you have 5 candles, and that candle had the lowest low of the last 5 candles, you would get the dots there, right?
Yep, that's right.
Yeah.
Yep.
Until of course you got another low with another where it was the lowest candle of the last 5 candles, and then
that's right.
Yeah.
Yep.
Like at the bottom of this chart down here, we can see that where that happened, where you had those two red dots. There's
right here.
Run there, and then another one right up above.
Yep.
Exactly.
And then another one here.
Yep.
Yeah, and then when we had this swing up and a pullback, we had a new zone established up here.
Yep, exactly.
So.
But you're only looking for shorts and down there, is that right? Because it was below.
Yep. Once we're down here, once we're below this 62 moving average that we use, once we're below that, my preference is shorts.
Yeah.
And then we'll get in, like we have an add-on opportunity here to add on to your short position, but I'll get into that on the next slide kind of thing. But
okay. Yeah.
Let's finish up.
Let's let you go because I don't want to.
Okay.
We have a lot of questions here, but we'll let you go because we'll probably answer a lot of questions. Yeah.
Okay. So we'll move on to whoops. So setup number 2 is when the market is wide awake and trending. We want the moving averages to be pointed up or down with separation. And there's one thing that I think we left out on the slide here is that we basically want, for longs we want to be above the 62 moving average. For shorts we want to be below. So that's one other criteria that I don't have on this slide. But basically, rule number one is you place your entry or add-on position 1 pip beyond the TFRL. You need to have the TFR-AO close to the 0 line, or above the 0 line or below the 0 line, depending on whether you're going long or short. And then the price needs to be close to the red line and or the opposite high or low to get in. And so on the next slide here, you can see that this was actually a trade we took in the room last Thursday, I believe it was. We called it at 307.5 on the euro, I think it was. So we had a blue arrow print here. We had a market that was, the original entry was the market was basically sleeping. We were close to the 62, but basically sideways action, you can either take shorts or longs. So we took a long here at 30.75. Our stop was down here. I think it was 32 pips below this level. And then in this instance, we actually called the target at the daily pivot, which was 31.20, I think it was. It gave us 2 to 1, but it did keep on going. And so for setup number 2, the market moves higher. It pulls back like it's done here. We've got separation of the moving averages. We've got a new zone established here and a zone established here. And then we get a buy arrow, and so you would add on at this zone right above the buy arrow. And in that case, and then you look for, on your add-ons, we're looking for 1 to 1 or better. So we get 2 to 1 or 3 to 1 out of the first entry, sometimes better, and then your add-on here. This trade, for me, actually netted 7 to 1 out of when it was all done.
That's great. Yeah, that's awesome.
Yeah, those are the trades that make those are the trades that make trading the system worthwhile, because we got in on a 30 or 35 pip stop, something to that effect, and in the end I think it went 220 pips or something. So that's where the real advantage to this one comes in. You might get stopped out every once in a while, or maybe a little more frequently, but your stops are very small compared to the reward.
Yep, that's awesome, Rob. Yeah.
Yeah, thanks. The next thing that we do use support and resistance, and a lot of the time what we're using the support and resistance as is really our targets, and determine whether we have enough. Is there enough room to get 1 to 1 at least out of the trade, sort of thing, right? So we always consider any barriers that might act as exit points, 1 to 1 or 2 to 1 minimum. There's different ways to exit the setup as well. Excuse me. The red line, so the red moving average, is a valid place to remove your trade. You can also trail your stop 3 pips above or below the most recent level, interim level. So it acts kind of as a parabolic support and resistance, if you will. You get a target exit, so you set your original target of 2 to 1 or 3 to 1, for example. So with a 30 pip stop, you want to look for at least 60 pips reward. Or a zone exit, so exit when the market reaches a high probability zone, and which in this example here, the market the euro reached a new high, and basically it's still in the same area if memory serves correct. I think we did move up a little bit higher from here, but after that, we did hit a major resistance level on the euro. So those are the things you want to consider when you're taking the trade. Ooh, wrong way. Sorry. So that's one of the reasons we use support and resistance in addition to the other indicators, is that it really gives us a target. Like a lot of the time when we're taking a trade off of the, at the start of the London session, the daily S1 and the daily S2 and the daily R1 and the daily R2 always end up being excellent targets. We watch in the room, we watch them hit those levels and pause over and over and over again.
Yep, absolutely. Lots of people watching those.
Yeah, they work very well. The other advantage to using the auto plot, the auto pivots, is that trading 1 hour and 4 hour charts, for example, to do it all to map out your zones every day it's a lot of homework. So I've just found that these indicators, these auto pivots that I use, kind of relieve some of the homework for us as well, and still work very well.
Yep, that makes sense. Absolutely. Yep. Yeah. What Hamza says, what about your TFRAO indicator sounds similar to the GMACD or the GMASD. Can we use that instead? Have you heard of that, Rob? I haven't heard of that
GMAC, I'm not exactly familiar with that one, but basically I think you can put together a system of whatever works for you, right? In this case, the AO is just a histogram of two moving averages, just another way to interpret the same information. Like the lines on the chart, for example. This is just another way to interpret that information.
Right. Yeah.
Yeah, it is very similar to Bill Williams' AO. It's just that we've changed the settings a little bit.
Yeah. Robert L. says, I know it might sound obvious, but should you add to the spread to make it just a little bit further out from where you intend? Or, like, for example, let's say you have a pair where you have a 2-pip spread, and you're saying you put your entry 1 pip beyond that support and resistance level. Would you make it 3 pips beyond, or how do you manage the entries?
Yeah, we always add the spread. Whenever you're doing a buy order, you always add the spread. So the entry is 1 pip beyond, above or below, and then plus your spread.
Yeah.
So in a sell, it would be simply 1 pip below the TFRL, and with a buy, it would be 1 pip plus your spread above the TFRL.
Yep. Cool. And the AO indicator, it's standard settings, right? It's the standard AO. Or...
No, actually, I've actually changed them to what works best for me.
Okay.
But I'm still. There is still some testing to be done. Like I say, I've been trading this for 3 months now live, and I still am tweaking the settings. But it's about 90% done, I would say, and we are trading it live in the Forex room now.
Yeah, cool. So okay, yeah, it does look like from your charts that the AO usually hops around a little bit more around the 0 line than yours. So if I was to make an educated guess, I'd say that you have a little bit longer settings. Not that I want to give anything away, but it does look smoother. It does look a little bit smoother than the standard AO. Yeah.
Yeah, we're looking for the best possible signals, and
right.
I know that Bill's settings right out of the gate are fairly good, but obviously we want to make it work for us, and really that's the key to any successful trader, is that they've taken a system, whatever their system may be, they're successful when they've made the system work for them.
Yeah, absolutely. Yeah. Bar Cancel has another great question. I love his question. He's saying, at what point in the trade do you move your stop beyond the red moving average? Because you have your stop initially on the other side of the other swing, right? Is that right, or am I got it wrong? He says.
Yep. Actually, why don't I throw a live chart up here real quick,
cool.
and we can just have a look at the charts that are the market right now. Let me see here. Here's the euro. So here's the euro USD. This is actually a 1 hour chart. So for example, this long down here at 30.75, when this trade hit 1-to-1 or better, you could move your stop to break even. Typically, generally what we will do is We'll give people the option of taking half of their position or taking some profit at 1-to-1, and then leaving your stop and letting it ride, or you can just wait till you get to 2-to-1 to move your stop to break even. I'm finding that so in this example for right here, this was a strong move. So you didn't have any zones in here to use as your trailing stop. So once you move to break even in this instance, you wouldn't move your stop again until this zone up here was established. And once you add on at this position, when you get this arrow here, once you add on to your position, then both of your stops go here, for example.
Yeah.
And you just keep stair-stepping up. If you want to just stay in the trade to capitalize on the trend, you would simply just, whenever a new zone has printed, you would move your stop up to that zone.
Yeah. And so your risk is really no more than one trade at any given time. Is that right?
That's right. Yeah.
Yeah. Because you're moving your stop. Yeah.
That's correct. Yeah.
Cool.
Once you've got 2-to-1 or 3-to-1 in profit, adding on another position, you're never going to, you've got, if you get 3-to-1 out of your first target and then you add on another position like you do here, your only risk at that point is whatever your risk is at the add-on.
Yes.
So it's actually a good way to maximize on a trend.
Absolutely. Yeah. Absolutely.
Yeah.
This
is a good example right here. Just quickly, I want to show you that. So to keep you from, yesterday in the room, it was a bit challenging yesterday because the markets were, it was really just kind of up and down yesterday. But one of the things that, if you pay close attention to this 62 moving average, on a 1-hour chart right now, a short is not valid. So even though we've got an arrow here and a sell signal, at this level the short is not valid because the 62 moving average is right below it. And you wouldn't believe how many times price comes to that 62 and then bounces. And it'll sometimes wick down so you think you can go short, only to close above it and then keep going in the other direction. And so that's one of the ways that you stay out of some of those some of those more riskier trades, I guess you could say.
Well, it happened down at the bottom of your chart, didn't it, where you had the opposite. You have that blue arrow down at the very bottom of your chart. That was a buy, obviously, but because you're below the 62, I guess in theory you shouldn't. It just went right to the 62 and then it fell, right?
Yeah.
Yeah.
So the in this instance your buy would have actually been here.
Right.
So it wouldn't have triggered
it
until over here anyway. But that close to the 62, probably wouldn't have taken it. In this instance, especially since we were winding down, this is the end of the day. This is during the Asian market right here.
Yeah.
This one here, even though we're close to the zero line, we're coming into the high volume, and you got this kind of tinkering around down here, and then you get a fairly strong candle. I believe this was also after a news event, and then I'm willing to take the chance, for example, and buck the trend, I guess you could say. But in this case, we still, if you look back a little bit further, overall the trend at this point was pointing upwards, right?
Sure.
So you might be looking, because of the slope of the line, you'd look at that and say, well, I think we're probably better off taking longs, but it really depends. What I've found is that as I trade it more and more and use these rules, I've learned, just by instinct, when to risk taking the trade, like in this instance, and when not to.
Yeah. Cool.
Okay.
Do you have more charts, Rob, or do you? Because there's lots of questions here. I don't know if you have. Did you want to go have more slides?
Well, we can answer some questions, and then if we have some chart related specifics, we can move on to that. We can go back to it.
Okay. So, how does this? ECal wants to know, how does this apply to daily charts? Do you still need 25 pairs to get a setup every week? Is it still profitable on the charts? Have you tested this on the daily charts, Rob?
Yeah, I'm actually trading at daily charts as well, and this is a daily chart right here. You're not going to get a daily setup on every pair. Um, sorry, excuse me. You're not going to get a daily setup on only one or two pairs every day. But if that's what you're looking for, you know, when you do get a setup, a valid setup, it's actually, you know, they can be very, very lucrative. For example, we have one here that the first entry would have been at this level, and it really would not have been valid. But then we get a pullback, and then we're above the 62, and in this case, you know, it could have, well, it wasn't all that great, but it would have been about 190 pips maximum. It's a little bit tougher to, depending on the pair. There are some pairs that range very, very well, trend very, very well, and you'll get more setups. But, you know, the thing is that over, you know, 26 or 30 pairs, there's a good chance you're going to have at least 2 good setups a week. And one of the things I'm finding is that on 4-hour charts, you know, in 4-hour charts, a lot of the time, the trades trigger at the same time where they set up. You know, the setups are basically the same time. You can trade 4-hour charts and trade swing trading almost as easy as you can trade daily charts.
Yeah.
So there's a lot more opportunities on a daily chart than there is, on a 4-hour chart than there is on a daily chart. But it is possible to trade both.
Yeah. Okay.
So right now, for example, the euro, there's a valid long that would be in profit. The question is, you know, this is another one of those times when you want to have a look at your weekly because, you know, would you take that trade? Is there enough risk to reward on it considering what we have over here on the left, right?
Yes.
So as with any trading system, when you're trading, especially the bigger swings, you definitely want to make sure that you've got enough risk to reward to take the trade.
Yeah, yeah. And do you have anything in your system that helps you avoid ranging markets? Another great question from Bar Cancel.
Really, what it is you know, what we just use the indicators to tell us not to trade. Like, we've got a pretty good example here. This was over, you know, the holiday season, which nobody should have been trading, unless, well, I guess that's not actually the case. There were some half decent opportunities on, you know, really low time frame charts, but you know, this to me just basically says stay out. This right here, this was actually Boxing Day, I believe. So, you know, I even with this arrow here, I wouldn't be taking that. But with this moving sideways, I would wait for the market to establish the highs and the lows like it has done here, and then, you know, wait for the breakout when the volume came back in.
Yeah, yeah.
Ranging markets is always it's always a tough one, but I find that helps.
Yeah, that makes sense. Do you have? Okay, Frank asked a great question. Frank in Singapore says, how many trades per one time are you doing? In other words, do you divide your risk up accordingly? Like, you know, if you're fully loaded and you've got 12 of these suckers riding, does that mean that you've reduced your risk, or are you still going in with 12% risk, or how does that work?
Well, as with any system, you can only trade as many setups as your risk allowance allows. Me personally, I will not risk any more than 2% on one trade, for example, and I do the same thing on the daily time frames, to a maximum of a 10%. So the maximum allowable risk that I will allow myself at any one time is 10%. But usually, I won't add to, you know, I'll take 2 to 3 trades at 1% off of 1-hour charts, but I usually won't push it much past that. And then once you know, 1 or 2 trades are in profit and locked in, I'm comfortable with opening up another position. but I don't like to have too many open positions. I don't want to be exposed too much, as as anybody would not want, right?
Sure. Yeah. Yeah. Do you just check your chart at the beginning of each bar? Ask Daryl.
It depends on what time frame you're trading, really. Because we trade this system live in our trading room, based on 1 hour charts, we're really in front of the charts for about 8 hours. We take a break in between. Obviously, we do about 3 hours, and then we take a 2-hour break and do about another 2 hours. But as far as for me, once the setups are once I've entered, that's one of the reasons I like to use targets, is because then I don't have to come back and check the charts all the time. But if I'm looking for an entry, other than like if I'm looking for a 4-hour or a daily entry, a swing entry, then yeah, I only check my charts at the end of the day, basically.
Mm-hmm. Yep. That makes sense. And Robert asks, is the Forex room traded from 2:30 a.m. Eastern Time to 11 a.m. Eastern Time?
Yeah, we start at 2:30 a.m. Eastern, which is a half an hour before the London Open, and then we trade into the New York session. And the New York session usually depends on volume and market characteristics. This morning, for example, I believe we closed at about 10 o'clock Eastern, because it was roughly 10 o'clock Eastern time, and that was because there really wasn't anything. With Bernanke speaking at 3 o'clock, we just knew there wasn't going to be a lot of movement.
Yeah. So Greg, if you're on the West Coast, I'm assuming that's California, then you'd be looking at 11:30 a.m. to, I guess, 8 a.m.
That's correct. Yep.
Greg says, well, that sucks. Yeah. Greg, well, you could always move to Australia, and then it would be like 6:30 p.m. until, I guess it'd be 6:30 until like 2:30 a.m. or something like that. So
yeah,
I don't know if that's better, Greg. Actually.
We actually have several members from Australia.
Yeah.
We have members from Singapore and London. So
yeah, Singapore's the best. Yeah.
Oh yeah, Ashley. Yeah.
Yeah, Ashley says Singapore is better. Absolutely. Singapore is the best, and Frank and Ashley are rubbing it in because I know both of them are in Singapore. Hawaii's not bad.
Hawaii is looking pretty attractive to me lately.
Yeah, exactly. Hawaii's not a bad one. It really isn't a bad one at all. So, Tim wants to know, what's your rule for when the news is scheduled as far as your entries? That's a good question.
Well, depending on the strength of the news, if it's a high-impact news event, like any other trader, you have to be very careful when news is coming out. If you take the trade, if there's a valid setup and you're going into news, you just have to be aware of that. But a lot of the time, when this produces a setup right before a news event, often we see price moving in the direction that the news is going to push the market anyway. So we do trade around news, and we do have a pretty good win rate with that.
Right. Yeah. I know it's not. There's two Greg W's, so I know, Greg, you're a different one. Yeah. Greg said, I would like to know who he is. Well, there's Greg W. and there's Greg Ward, and and Greg Ward wants to know who the other Greg W. is. I don't know if he's willing to release his personal information, Greg. Funny. How much is the trade room? Asked David. How much is the trade room, Rob?
The trade room is $149 a month, but that also includes swing signals as well. You can sign up for just the signals, but the trade room comes as a package deal.
Right. That's cool. Yeah.
And we do offer the first week, if you are unhappy with the results in the first week, we'll refund your money anytime in the first week.
Okay, so the first week is risk free. So essentially,
Yep.
You can taste test the first week, and if you don't like the flavor of it, you say, okay, that's not for me. You're happy to refund them. That's great.
Yeah, that's right. And we do have a I'll just pull up we do have a blog with all of our results on it. So if you just want to follow the blog for a while and see, how well we're doing, if it's good enough, if you want to risk your hard-earned money on coming to joint trade with us for a while, I can put that link up here so that you can see it.
Okay, that'd be great.
Sure. Here we go.
Greg Ward is in Arizona, right?
Greg Ward is in California.
Oh no, he's in California. Yeah, out in the desert. Yeah.
So here's this is the blog. It's just the forexroom.blogspot.ca, and at the end of every week we post all of our results, who called, how many trades, and so on. And as I said, we've only had one losing week in the last 12, basically. So.
Right. That's awesome.
Yeah, it's really good.
Pablo, we'll give you a link right now for the trade room. We'll give you a link right now.
Yep, I can do that.
These guys are getting a discount, or do we give them a discount the first month, or is that still on? Is that discount still available? No.
Yeah, I believe it is. You know what? I honestly can't remember what the had set up, Walter.
Yeah, we had a 99. I think last time we had a $99 month, and then it went to $149. I don't know if that still applies for these guys or not.
We'll honor that. That's absolutely, we'll honor that. So if you wanted to sign up for the first month, we'll offer it at $99 for the first month, and then if you're happy, then we hope you stick around. Yeah, that's absolutely more than fair. So here is, I'll just send this to everybody, Walter. This is the link.
Yeah.
There we go. So that's the link that you can use to sign up at $99 a month. If that one doesn't give you the $99 a month, then just email support@forexroom.com and let them know that you're from Walter, and we'll honor the rate.
Yeah, here's one too, Rob. This is the one you used last time. I just set that one up. So here, this one I know is definitely 99. So yeah.
Okay, let's use that one then. So use the link that Walter, if you're interested in signing up, the link that Walter just put in there was $99.
Yeah. So that's $99, and then what I'm going to do when I get back from holiday next month, I'm going to have 3 webinars. So everyone who signs up for the Forex Room, if you like it and everything's going well, the next month we'll have 3 webinars together as just sort of a bonus. Okay, so for those of you that want to, that are interested in this stuff, that's on offer too. So it's $99 if you want to go in the trade room. How much for the signals only? Someone asked, Rob. What's that?
The signals only is normally $99 as well.
Oh, okay. Well, you might as well.
So by signing up now at $99, you get everything for $99. It's a pretty good deal.
That sounds like a great deal. Yeah. So okay. So basically, right. So for $99, you get the trade room, you get the signals. If you don't like it after a week, you get your money back, no questions asked. And if you stick with it, it's $149 ongoing. Okay, cool. Excellent. And I will see everybody who signs up through that link. I will see you guys next month. We'll have 3 webinars on a trading system that I want to show you, so you can have a look at that too. So that'd be great. Yeah. Is it on sale? Tim says, is the Surge system on sale on its own?
Actually, it will be.
Oh, okay.
We're going to sell it really cheap. Basically, just probably somewhere around $49. We don't have it. It's not quite complete yet. Where you have we're working on the manual for it, the rules, the way we trade it, and so it will be available probably in the next 30 days.
Okay, cool. That's awesome. And Bar Cancel has another question about the direction of your moving averages. What does the what does the forwarded moving average angle info give you? So in other words, because they're shifted forward, what kind of information are you getting from that?
Basically, the way you look at it, the way we use it is we kind of look at it as a foreshadowing of where the market is going. So by shifting the moving averages out in front of the price action, you can see how price is reacting to the moving averages better. And for example, if you're looking at a possible long signal and your moving averages are curling to the upside, that just gives you a little bit more information to suggest that taking the trade is the right trade to take.
Yeah, yeah, yeah. Okay. You can follow along with the surge trades in the trading room. That's right, Robert L.
Yep.
4 hours.
Something else I should mention quickly is that anybody who is a member of the live room, when the system is ready to be released, will receive it as a bonus.
Oh, okay. So you get it for free. Cool. All right.
Yeah.
And do you have the indicators available to test in Forex Tester, or is this just something forward tested only?
Yeah, I don't have the Forex Tester model available. I basically have just done straight back testing in MT4 as well as forward testing live. So
yeah, that makes sense. Okay, thanks, Warren. All right, in 4-hour chart traders just need to check the charts at New York close rather than the London open. Well, it depends on when your 4-hour charts open and close, but basically mine, I think my charts, my 4-hour candle prints 2 hours after the London open, I believe.
Yeah, I believe mine does as well.
Yeah.
Yeah, mine closes about 2 hours after as well.
Yeah.
Yeah, it really depends on what time frame your charts are on, who your broker is.
Yeah. I mean, David, it is possible. It will be possible to test this system in Forex Tester. You just have to get the indicators coded, and I can help anyone that wants to do that. I can point you in the right direction. But yeah, you can test it in Forex Tester, David. It is definitely possible.
Yeah.
You just have to get it programmed. It probably won't cost you more than $100, David, if you wanted to do that. Yeah. Okay. All right. I think that's it, Rob. Thanks a lot, guys, for your time, and welcome, and thank you to all of you that couldn't get into the webinar because it was sold out, but I'm glad that you were able to watch this recording. And thanks so much, Rob, for your time. I really appreciate it. And showing us.
Thank you, Walter.
Yeah, it's a great system.
Thanks for everyone that joined us tonight as well.
Yeah, thanks, guys. All right, take care, everybody. Thanks. Yeah, Lewis, it is a great system. I agree. Thanks, Scott. Okay, Joe. See you later, Barcancel. Thanks, Ted. All right, thanks, guys. We'll see you later. Bye.